everybody, Alex LaChance from Regarding Real Estate. I'm here with Mortgage Matt. I always have people coming to me asking what they need for credit. It's not really my department, so I'm going to have Matt talk about that a little bit.
Yeah, I'll speak on some credit overview in a large context of some base minimum scores needed, as well as how you can monitor your own credit and what you can do to sustain positive credit and get yourself in a great spot to obtain the best mortgage product as well as interest rates out there at the time. So first things first with credit, the number one important thing is to pay everything that you have currently on time. Your car payments, your student loans, credit cards, anything that you have on credit, you want to pay it on time. So when the credit report gets reviewed by a mortgage professional like myself, we see a consistency of paying your bills on time, which mitigates the risk in the overall file. How do you do this? When you have a $10,000 limit on your credit card, you don't want to max it out to $9,999 and just pay the minimum every month. The best thing you can do is try to keep each percentage on the total limit at 30% or less on your credit. That way it shows that the risk is mitigated and the overall file has some strength to it. Secondly, I want to talk about some scores for minimum credit needed. Everyone thinks that their credit, generally when people come to me talking about credit, they're scared about not qualifying. So 580 base minimum needed for FHA, we're talking 580 base minimum for VA, 620 for USDA and conventional with some exceptions. And these are just the base to qualify for these programs. So overall, on a credit aspect of it, if you come into me with an application and you apply, the one thing that I like to do is when you're not qualified out of the gates, I don't just take the application and go throw it away. What I'm going to do is I have a tool within my system I use in the CVC website is I can actually see some actions that you can take to increase your credit score, whether it's paying down a Capital One card, $200, or whether it's paying off a couple of debts or collections in full. I have some tools on my end that are really, really large assets to my business that I provide to all my clients as far as giving you a game plan to structure your credit report in the most positive way to increase your score in the best time frame possible.
And when can they stop worrying about their credit? You know, once you pre-approve them, can all of a sudden they go and buy a new car?
So when you do go, when we go through the mortgage process, hypothetically we go under contract, we've already pulled your credit, we've already gone through the underwriting stage, and we're under contract now at home. So in that time frame, what you don't want to do is you don't want to apply for new credit. You don't want to go and put the down payment on a Bob's Furniture setup. You don't want to open more debt, because what happens is days before we close on a property, we do what's called a soft pull credit inquiry to make sure that you haven't shopped around another mortgage company, opened up another mortgage debt, as well as you haven't taken out any more debt that's going to reflect your debt to income ratio. I strongly encourage you to not open up any new debts between the time you apply to the time you purchase.
Literally don't do anything with your money that you don't run by Matt or another mortgage professional until you've closed on that house and you've been living there for 3 days.
Yes, it can be the difference maker between closing that transaction on time or absolutely falling apart back to square one. So credit overview 101, Alex LaChance, Matt Family at Envoy Mortgage. If you have any questions, reach out to us.